The time has come, it's almost here. Another day on the markets, approach with no fear. The stage is set, all engines go. Welcome to the angle. Let's start the show. Hold on tight, the stage is set. Digging deep with no regret. Red and green bars leading the way. Welcome to the angle. No time to delay. Markets rise and markets fall. Atomcash is ready to answer the call. While the bulls charge hard and the bears dig deep, the angle will keep you on your feet. Hold on tight. Hold on tight, the stage is set. Digging deep with no regret. Red and green bars leading the way. Welcome to the angle. No time to delay. Cashing in on the highs and lows, where the wind of fortune constantly blows. No looking back, keep your eyes on the prize. Fuel the run with a fire that never dies. Hold on tight, the stage is set. Digging deep with no regret. Red and green bars leading the way. Welcome to the angle. No time to delay. No time to delay.
Good morning, everyone, and welcome to the most entertaining, intellectually stimulating financial podcast in the entire world. You're watching the Atomcash Angle, the show that flips the switch and floods the system with straight financial voltage. I'm Atomcash, and I'm bringing you the firepower your financial life may have been missing. Now, whether you're new to trading or a trading savant, I am to turn complexity into clarity with a shot of adrenaline. And today is a start of a brand new OPEX. We have a very packed week. We have earnings week coming up. We got a lot going on in the market in general. We got a lot to talk about, so hopefully you stick tuned for the entire episode because we got a lot to go over. I even have a segment on the VIX specifically and about how backwardation works. So as you guys pour in, I'll remind you guys, but we're going to talk about the VIX and backwardation and contango, which is something that's going on right now. We're on the precipice of potentially happening. So it's something that we want to talk about, at least to bring you guys, I should say, at least bring it to the forefront of your mind as we look at the market and as that could give an inkling of where things are going in the near term. Now, on Friday, we saw a very interesting day, in my opinion, where we kind of didn't really go, I mean, we went up obviously, but we didn't really go too much of anywhere when we're looking at the entire week. In fact, what I was more focused on is this weekly candle here, which isn't by definition a doji candle, but it is something of some level of indecision, at least in my book, where we're at an inside bar. So this candle last week's price action was on higher volume than the prior week, but all that volume was contained inside prior week's price action. So this gives you some inkling of indecision potentially in the market. Now, the higher volume piece, you kind of want to write off with a little bit of an asterisk, mainly because it was OPEX. So OPEX tends to show more volume in general. However, that kind of is dispelled by Friday's volume being less than actually Thursday's volume. So these are the kinds of things you want to consider in general. Now, looking at the daily chart here, you can see that we kind of bumped around, which obviously supports the narrative of what the weekly chart looks like here, kind of having some level of a doji candle, leaving a wick to the upside, leaving a wick to the downside, and not really moving too far within the body of the candle. We opened last week at 660.65, and we closed the week out at 664.39, so giving you about a 4-point bump or so in the overall market, which isn't really much. Now, granted, going back to any of these weeks, that's fine. That's normal price action. But because of how that prior Friday's week ended, and because of how we had this kind of candle open and close down about 20 points roughly, that is a little concerning that we didn't really either get out of the range one way or the other. So this today should be very interesting. What you're going to want to watch as a bull is to get over basically the high of last week, which is going to be right here. 670.23, which right now we're just shy of in the pre-market, 667.59. If you're a bear, a few points to watch actually. The bottom of last week's candle, that Friday low from the prior Friday, and now the 50 MA on the daily. So we have a lot of confluence down here in terms of it being a key support resistance kind of area. That 50 MA on the SPY right now is 653.63. The low of that prior Friday candle is 652.84, and the low of last week's candle is 653.17. So in this whole range between 653.63 and basically 652.84, you have a range of about $1. Down there, if that gets tested, needs to hold because of how many key points that has. It's got that previous Friday low, it's got last week's low, and the 50 MA on the daily chart. There's a lot of confluence there. If that breaks, that's going to be very, very bad in the near term for the stock market. Now, I'm not necessarily leaning bearish or bullish here. It's just a matter of something to be concerned about. I said last week, and I believe I put it on a post on X, about this market is not really it's not really a bearish or bullish environment, as last week's price action can show you. But you should be thinking about it being more risk on versus risk off. As I like to talk about on this program, for those of you that watch it pretty frequently, you know how how much I talk about how important risk is in general. This kind of environment where, again, we basically went nowhere, citing the weekly candle here, is something you want to keep in mind of saying, maybe I should reduce my risk because volatility is still remaining pretty sticky, it's still pretty high, and price action was kind of dull. Me personally, I moved a lot of my positions. I had tighter stops on. A lot of stops got triggered. So I'm actually sitting pretty heavily in cash, about 70% in cash. And in my small account, I think we're at like 50% in cash. So pretty heavy cash position right now as the uncertainty looms right now. Other things I want to cite with you guys before we get into the market here. Q's had a very similar candle to SPY on the weekly chart here. I would argue a little bit more bullish because that lower wick, or that wick is a little lower, meaning it back tested a little deeper and came up higher, which is better theoretically. But you still didn't break those highs, and it's still, like I said, some level of an indecisive candle there where you've tested price action to the highs, you tested the lows, we kind of closed somewhere in the middle. Again, not necessarily a doji candle by definition, but anytime you see candles like this, considering the prior week's price action, and again, another inside bar here, you may want to take that into consideration with your risk assessment. Now, the last thing I want to touch on is IWM here, which actually broke out of the previous week's range, but left a nasty wick to the upside here. So this is showing a strong rejection in price in general. Now, it didn't close lower, which would be even worse if this closed as a red candle and pushed the lows or even broke that Friday low. That'd be really bad. But the fact we have such a deep wick here is very concerning to me in general, that this is a sign of exhaustion potentially for small caps here in the near term. Now, so far in the pre-market, we're looking pretty bullish on all three indexes. It looks pretty good. In fact, IWM is leading the pack here, up about 1.2%, so it's looking better. But I would be very, very cautious as a bull on IWM until you, with volume, sustained volume, get over that Friday high. So prior Friday's high. So not last week, the week prior to that. Here's the daily candles on IWM. And it kind of tells a similar tale here where, again, we broke out of that range, but even on that breakout there, right? We talked about that wick on the weekly. Now we're looking at the daily here. Again, some level of a doji candle, wick to the upside, wick to the downside, closing in the center, and then a big rejection the next day. So this is not sparking any sort of confidence in me for longs on small caps, at least in this point of time. And we're talking generals, right? In generality, that's not sparking a lot of confidence in me. You're also noticing volume has actually been climbing here in the last 3 days, which is signaling a stronger sell-off than shouldn't be or should be on that kind of rejection. So that's a little concerning as well. And again, the things I'm highlighting to you are risk factors. So again, it might sound bearish, but it's not necessarily bearish. These are risk factors. These are things to consider because the risk is there for a pull down. Doesn't mean things are necessarily bearish yet, but that risk is a real risk here in this environment. Last thing I want to touch on is the VIX. Now, we're going to have a whole segment on backwardation and contango on the VIX later today, so make sure you tune in for that, or stay tuned for that, I should say. But we actually saw the VIX was in backwardation on Friday. And I'll explain what that means in a little bit because I'm going to do a whole segment on it, so I'm not going to get too in the weeds. But typically, when we see backwardation and backwardation resolve back to contango, What that means is the market sees a bottom and then reverses to the upside, typically. We're not really out of the woods, though. What I want to show you real quick here, hold on, let me pull that up. Here we go. And we'll go over this again on when we talk about backwardation in the VIX later on in the show. Current VIX contracts, so right up here, if you want to look at I like to look at the first like 2 to 3 to kind of get an idea of where volatility is sitting. And this is straight from CBOE. Your settlement prices are right here, so you can just look at these, and this is what I personally look at for simplicity. The next 4 contracts here, we're all sitting at the same price, right? That's the settlement price there at 2091. We're seeing, and what we saw is as these came down, these held relatively steady, which flipped us from backwardation back to contango. However, because these values are so close to our farther out values, again, these are contracts for next year, and these values aren't too far off, right? We're looking at 21, 21.5, even right here, you're technically in some level of backwardation right here for your December contracts. This hints that we could flip-flop between backwardation and contango in the near term here, which to you should mean something to be very, very cautious of, because what that essentially means is that the market has not resolved itself just yet. So if you're a bull or if you're a bear, it doesn't really matter. The market really hasn't said confidently what direction it's really feeling at this point in time. So that's something you definitely want to take under advisement. And again, please make sure you stay tuned to that segment of the show. I got a whole little write-up on the VIX, on backwardation, on contango, which is very applicable right now. So you're going to want to make sure you stay tuned to that. We'll do that probably around 10 o'clock. We'll go through the market open and everything, get through there. Before the market opens, I want to pop over to our news for the day and see what we got coming down the pike, at least for today and tomorrow. We got Trump greeting the Australian Prime Minister at 11 o'clock. Really pretty quiet morning here around the open. No real scheduled news. And really for the rest of the day. So it's looking like we're going to have a quiet day. Nothing really scheduled to occur. Yeah, that's a 6-month bill, but that's not really going to do much in the 3-month bill. This is earnings week, or is the start of a earnings cycle, I should say. And I know we have some bigger earnings coming down the pike. You got General Motors, you got Coca-Cola, Lockheed and Martin, and RTX. That's going to be tomorrow. Other news for tomorrow, Fed speaker or two here. You got a conference, you got the Treasury Secretary speaking, you got Netflix having their earnings tomorrow, so that's one to watch out for. We might have CPI depending on if that's government data that's available, so we'll see. That's Wednesday. I'm sorry, that's not Wednesday. I misread that. That says UK CPI. But either way, I believe we were supposed to have CPI on Friday. No, it's retail sales on Friday. And it's CPI. Okay, I was right. So we're supposed to have CPI on Friday, but again, because the government shut down, we may not necessarily get certain data. I believe CPI is one of those indicators that we're not going to have the data for. So it's scheduled for then. Whether or not we get it's a different story. We'll see. Probably not. But other big earnings this week, AT&T. I'm just going to go through them because this is not something that we're going to focus on right now. AT&T, IBM, Tesla, T-Mobile, few treasury bills. All in all, actually a pretty quiet week with the exception of earnings and the potential for CPI at the end of the week. But all in all, not really a hugely volatile week scheduled in terms of news events that are predictable at this point in time. Yet, we'll see. That could change. But for now, pretty calm. Guys, we got 1 minute until the market opens. Do me a quick favor. If you haven't already, please interact with the stream in your favorite way. Drop a like on the stream if you haven't already. Say hi in the chat. I typically say hi back. And if you haven't already, drop a follow wherever platform you're watching, whether it's YouTube, Instagram, X, Kick, or Twitch. And most importantly, if you haven't already, pop on over to the YouTube channel. Once we hit 500 subscribers, this will be an everyday show. So if you enjoy the content and you want more of it, do me a favor, run over to that YouTube channel and hit subscribe if you haven't already. Thank you very much in advance for your support. Omar in the chat saying he's first. Good morning, Omar. And he's surprised that the Topster isn't here. Yeah, Toby is not here yet. We will see. Eddie dropping you're in the chat just in time for the open. Yes, sir, you are. A few seconds here until the open. Now, again, it's Monday, so we want to make sure we let the open kind of do its thing, right? Give it some time. I'm expecting the IV to be very high on the 0 DTE options. So we're going to take a look at that as well once we get some data through here a little bit and kind of go from there. Hatchet dropping the good morning, my friend HR with the ayo, my friend. Good morning. Again, a quick little pump here on the SPY for right now. Pre-market high right here at 677.77. And now that I've added my drawings, you can see here, this key LOI right here, these two key LOIs, especially when they're close together, you want to keep a tight eye on that. This 667.29 and 667.34 basically rallying right off the open here. So this is what you're going to want to see bulls push above and hold here if you are a bull on the market. The daily SAR, so a few things we got to keep an eye out here on the daily, especially if we're trying to push here in the open. Again, the numbers to watch here, you're going to look for last week's high. So last week's high was 670.23. And then we're going to want to watch this red SAR here on the daily. So 670.23 and 670.11. So for simplicity's sake, we're going to mark out on our daily chart 670.23 because it's going to cover both of our means here. Did we just gap? That's a 1 minute candle. Did we gap on a 1 minute candle? That's nutty. 670.23. We'll put a nice bright red line there, because that's going to be a key level for the day. Ooh, I just got an alert on Better. Better is breaking my trigger level of 670.01. If you watch my video on Better, BETR, stock ticker BETR, that is breaking a key markup level. Why are my charts delayed? I got price action. I got no candles. I guess we'll come back to that. Ooh, NVIDIA very volatile at the open here, kind of wicking. And again, talked about this on the program at nauseum, how important this 183.30 level is on NVIDIA. We wicked it twice. You also have the 200 MA there, and we're rejecting it at the open. So be very cautious here. Very, very cautious. Even that, with that happening, the market is still holding up pretty solid so far. There must be an issue. I'm getting a delay on cameras, which, by the way, I want to tell you guys, there was an AWS outage. So for those of you that trade on, or if you're in the Northeast specifically, which I am, so we might have some technical difficulties with Webull potentially. We have live price here. We don't have candles, but we at least have live price. On people who live in the Northeast, like myself, there is an outage on AWS that's affecting, I know for a fact, so far I've seen Public and Robinhood affected. Other brokers can also be affected. The important thing to know here is this is not a broker specific issue. So we talk about that quite a lot in the program. You don't want to trade when there's a broker issue, when market data is wrong or something like that. This is not a broker issue. This is not an issue with the exchanges, and this is not an issue with CBOE or any other exchange or any market aggregator. This is simply an issue with AWS. And as you can see, my candles just pop back up here somehow. So if you are in the Northeast like myself, you might experience some sort of issue. Yeah, Hatchet just said Webull's not working for him. I don't know. Are you in the Northeast, Hatchet? You know, obviously don't dox yourself, but if you're in the Northeast, you might be experiencing the same issue that I am. So at least we got live price. That's what's important. We're not getting candles right now. So definitely take it easy, especially if you live in the Northeast like myself. You might be experiencing this issue, just so you know. Toby saying, sorry he's late. I know the show can't start without me. All right, man. This is an interesting little divergence here. We're seeing not a lot of strength come out of NVIDIA, which again, we got to rock with price, guys. I'm sorry. We don't really have candles coming through, but we're going to do the best we can. We're seeing NVIDIA drop in price right now while the market grinds up. I don't know why I have SPY candles, not NVIDIA candles. We're seeing the SPY push up to the upside in some levels, so showing some strength here while NVIDIA is coming down, or, you know, at least looking at price. And my drawings disappeared. So you guys know I have a line here at 183.30. It's gone. It's there. It just won't populate now. All right, so today might be a day where at least I have a hard time here on Webull. We'll see. Better is pushing. Again, I don't have candle data for this for some reason, but we're at 72. The trigger level here on Better, so stock ticker BETR, was 67. Over 67 here, and at least we can probably have daily candles. All right, we have daily candles. Over 67. If this breaks my second trigger of 75, this will mark up to 99. And if it breaks 99, this has huge potential squeeze ability, markup ability here. I know it seems a little crazy. This is a $1 billion market cap company. It can mark up very quickly, as it already has. Straight, you know, just being transparent. Nice little back test here. Getting a little bit of bounce, getting a little excitement here on Monday morning. So we'll see if there's any follow through to this name. Hatchet says he's in Denver. I was working 10 minutes ago. Seemed to stop right at open. Yeah, be careful. I don't know if Denver, it's not necessarily, it's obviously not the Northeast, but maybe you're included in the AWS outage. I'm assuming Webull also probably uses AWS, like Robinhood and like Public, like these lower cost brokers would use those things, obviously. So that could be an outage that we're seeing. X has service he's trading. Yeah. I mean, I have service. That's what I said. Like, I'm looking at E-Trade right now. E-Trade's fine. Fidelity's, I mean, for what I could see, it's fine. I just like using Webull for their interface, like for charting, which sucks for me if if I'm using Webull to chart and the charts aren't populating. That's no bueno. So rare issue here. Anyway, look at the VIX here. Again, don't have candles, so we're gonna rock and roll what we got here right now. Hopefully, we'll get data here very soon. Currently sitting at 1961. You're going to want to watch this 2030. Now, reminder, today is the first day of a new OPEX, so we're going to want to watch things very carefully here. Make sure if you missed the whole beginning, because I'm seeing a lot more viewers coming right now, keep an eye and hang out for later in the stream. We're going to talk about the VIX. We're going to talk about backwardation and contango as if you don't know what the hell those words mean. So you may not know what those words mean, but they're important that you do. We're going to talk about that here. I have a whole segment laid out for you guys. So we're going to talk about that. Please make sure you stay tuned for that, especially if you want to learn something. It's very important to know what we saw on Friday and what we could be kind of hinting at here. We actually saw the VIX move into backwardation on Friday. And now we're technically in contango, but it's iffy. It could flip backward to backwardation again, which is, it's not very common. We flip-flop back and forth, but it's not clean on volatility yet. So for those of you who trade volatility or you want to learn how to trade volatility, these are kind of the things you want to learn. So we'll be sharing that live with you here. I'm glad YouTube doesn't have an issue, at least. At least YouTube has their own servers. All right, better is up at $74 right now, 73.88. Again, second major trigger here, 75. We talked about this on the program quite a bit. I've had 2 videos up on the YouTube channel about it. This is a beautiful daily candle here, up 16% on the day here. Like I said, this one realistically, if it breaks 75, will at least test this $99 area. Those localized highs at 94.06. So between 94.06 and 99, expect some level of profit taking. But if it pops 99, this is going to go. This is going to move. The daily chart looks solid here. And again, if we're looking at a momentum trade, the momentum names have been a little risky lately, especially with how IWM has been sitting. And then we talked about that in the pre-market here on how I don't love and I actually hate this weekly candle here. But it doesn't mean that certain names can't rally. IWM right now, we're going to use daily charts and live price to kind of walk us through the day here. IWM currently at 247.39, which I hope is valid because there we go, 247.45, right in between these two LOIs. So it's right at this 247.18 LOI that's testing right now. Keep in mind that's also at the Friday high. So not last Friday, the previous Friday's high of 246.89. So you're in that rough area. So you want to be careful here because that could be a little bit of a liquidity sweep to the upside here where IWM may reject here on the daily chart. The Qs, on the other hand, we're over last week's high, so it's a good sign on the Qs. That's pretty bullish. We'll see if that substantiates anywhere. And on the SPY, do we cross my line here? Not yet. This is your big line in the sand for the day, 670.23. That's basically all you need to worry about with the SPY today if you want to know in general how the market's going to perform today. So far, things are looking bullish. Remember, this is the first day of a new OPEX, so things tend to be a little bit more volatile, and you do tend to see today and tomorrow kind of give an inkling on where the market wants to go here in the near term. So we want to be very, very cautious with how things are sitting, but this is a good open. This is looking bullish. It looks like a lot of fear might come out of the market. I'm trying to use very cautious words here, and that this might actually stick as some level of a cool down, which is crazy. That if this is the only cool down we're getting before getting a new rally, and we're just going to Santa rally to the end of the year kind of thing, that's great. I'm not mad about it, but it might be party on. Again, that one level is what we got to look at. If we break that 670.23 and we sustain over, so basically I'm looking for a close over this level today. Then I would shift, I should say lean more bullish in the near term, depending, keywords here, depending on where volatility sits. This is atrocious, and I don't know if I can work like this with this not updating. Like, bad. Down detector. Let me just see if other people are experiencing. I know, Hacker, you mentioned you had an issue with Webull. Maybe I should short Amazon. Yeah, users indicate issues at Amazon Web Services in the East region, U.S. East region. Multiple problems impacting AWS infrastructure. Oof. All right, giant spike on Webull down reports. Yikes. Okay. So, gonna want to be careful. Apparently, if you're in the eastern area where the AWS outage is, like myself, so just be real cautious. Again, I don't have the issue with E-Trade at least, which is where most of my money is kept, which is nice. And this is actually one of the other reasons why I say how important it is to diversify your money over multiple different brokers. There are times when one broker may go down, another broker may have an issue, whatever may happen that are just simply out of our control, and you can't do certain things. Like right now, public is just down for me, and thankfully I don't have any really short-term options trades or anything, because this is, again, for my small account that I run with our Discord community exclusive trading. But I have completely frozen data on my public. It's not updating at all. It's just frozen. So if I was an options trader, I would be very, very concerned right now about that outage, because it would tie my hands. So that is one of those scenarios where even for me today, I may not want to take any risk with a trade, because maybe the infrastructure on E-Trade tends to go down because the AWS issue got worse, and for whatever reason, E-Trade is then now affected. I don't know. But this is at least a wide enough issue to affect me personally in the Northeast here. So hopefully you're okay wherever you are. Hack just says, bad news, no Webull. Good news, you have my undivided attention. Hell yeah. Alan says, down on the West Coast for some brokers. Schwab seems fine. Okay, so be careful, guys. And again, just to reiterate, I know I've spoken about this in the past, but sometimes we have new people watching, and I know a lot of you come back to watch regularly, so you might hear me say it a few times because it's important. When there is a broker issue, you take on extra risk, right? If you can't trade, like my screen's frozen right now, if you can't make any trades, you're taking on additional risk. If you can't get in and out of your trades, and we're talking mainly as a day trader, or if you're someone who's trading shorter term contracts, you're taking on ancillary and extra risk where you can't get out of your position. So even if, like, for example, I got on calls and SPY at the open, and now I'm up 30, 40%, however much I'm up, let's say I can't close them because whatever, Webull, E-Trade, Public, Fidelity, whoever is down for whatever reason, and it's a 0 DTE or even a 1 DTE, and the market grinds up, it hits 670.23, now I'm up 200%, but guess what? I can't sell. And then it just rejects hard because Trump's farted into a microphone or something. And that causes the market to crash, right? And I still can't sell. I can't put a stop loss on. I can't do anything. That is extra risk you don't want to take, period. I'm getting, like, look, you're watching my screen right now. I'm live. Frozen. It's frozen. And I'm getting bits and pieces coming through. So you do not want to take on this extra risk. I'm going to look and see if TradingView has the issue, actually. I don't really like using E-Trade, their charting stuff, and I'm not set up for it. Like, I have all my indicators and stuff on Webull, but now that this has happened, I probably want to set up another charting platform in case there's an issue. Toby says Webull trending on Twitter, flag. Yeah. Here, I'm going to put out an alert in the Discord just so people know. Please be extremely careful. Broker outages, or I should say trading when there are broker outages can and will cause you to take on additional unnecessary risk. I cannot spell unnecessary, apparently. My TradingView is not loading either. I got, on my TradingView, I've got live price, but it's lagging hard. No candles. Not a single candle. So I got live price, so we can talk. Dad, if you're watching, because my dad will look at a price and be like, yeah, I like the price, and he'll buy it. He doesn't look at charts. So we're going to trade dad style today. We're going to just look at price, and say if things are a good price or a bad price and go from there. And we at least have daily charts, right? So intraday trading, probably not going to be a thing today, but at least we can look at daily charts and we can kind of see what things are looking like on the daily charts and kind of go from there. So at least we have something. Oh, look, I got my better candles. Here we go. Wow, look at this nice little rally here in better. Right up to my 75 trigger. Couldn't take profit even if I wanted to, so this is, I guess, forcing me to hold, which it's okay. Up 20% new high a day on better. And again, this big level to watch here between 95 and 99. If those break, this will probably aggressively mark up. I know it seems a little crazy, but keep in mind it's only a $1 billion company. This could still move fairly quickly. It's still in that small, medium cap size-ish company where it's small enough where it can still have these bigger moves. And the float, I believe, is relatively small. Free float. Yeah, the free float on this company right now is 6 million shares. That's tiny, especially at this stock price. So this can move very quickly. And that can work against you as well. So be very mindful of that if you are long on better. Toby saying Google over 250, we're chilling. Yeah, I still have my Google 250. What are you talking about, Toby? I got 255. 255. I have my swings on Google, which again, actually, they're in my E-Trade. Maybe I could trim them. Whatever. We'll wait. We'll wait. I opened up those swings on Google. I talked about them on the program where I wanted to open them up. And I'm rocking the 245 calls right now for Halloween. They expire on Halloween. I opened them up at 8:42. And let's see what they're worth. If I get CBOE data, we'll see. We will see if I even get that. So if this loads, we'll see how much they're worth. But we talked about that on the program. I said what I was specifically looking for. They went a little lower than I thought, but if we ignored that one candle that we saw on the daily chart with Google, basically had like an inverse head and shouldery look, and we're rocking and rolling right now. So regardless, those contracts at an intrinsic value are at least $11 right now, which is still up $4 from my entry or 50% from the most conservative point of view. Again, just looking at intrinsic value. This sucks, man. We might just roll into the VIX segment I got for you guys. If you guys like that, maybe we'll come back. We'll do the VIX segment. I got a whole segment on backwardation and contango, so it's all educational piece. If you guys like that, or you guys want me to kind of still try to press through the market open here with minimal information, your choice. 1's in the chat if you want the VIX segment. 2's in the chat if you want me to still analyze as much price as I can here before doing that segment. So 1's for VIX, 2's for keep watching the live market. Right now, while you guys are voting, we're looking at the SPY and we're seeing, again, some data right now, some level of resistance here, potentially beneath the 66937 LOI on SPY. Again, as a reminder, and I'll keep saying it probably till I'm done streaming today, I would not be a bull on the market and I would feel very risk off on the market until we surpass 670.23. That's going to put you over last week's high. That's also going to break the daily SAR on the SPY. So you have two really definitive bullish indicators pushing in your favor there in terms of price action. On top of that, you're going to want to see a close above that. So you got a few things to concern yourself with if you want to be a bull on the market, at least in my opinion. You're going to want to see over 670.23. Thank you, Toby. So Toby says the Google Halloween 245s are at 1630, so that means I'm up 100, literally like 100% right now on those Google calls, which is lovely. And I got a week now? 2 weeks? Yeah, 2 weeks expiration. Not bad. The VIX is in this little zone here where we're under 2030. So this is going to be your trigger point on the day. If we break over 2030, that could give you an inkling that volatility is looking to come back into the market. Now, so far, we're grinding down on volatility. Even the UVXY is pushing lower here right now. Down about 7% from what I can see. And full transparency, I actually have a volatility long I took on Friday that I'm sitting pretty red on. But it was worth the long on UVXY, and they're $14 calls. So I would not necessarily suggest considering that position right now. But we're going to talk about why I considered that position and why we're rolling, or why I decided to long volatility on Friday here for this week in a moment. So far, Monday, first 30 minutes looking bullish. If I'm a betting man, so this might scare you guys, but if I'm a betting man, we close the day red. I told you what I'm looking for specifically for a bullish reaction, a bull day essentially. If I'm a betting man, if I'm putting my money where my mouth is, which I'm not doing because I don't think I could even execute a trade if I tried, I would not bet on a green close today. There's the scenario that I have is closing above this area for me to be bullish short term. If that changes, and if we don't get above there, or if volatility moves north of 2030, then we're more than likely going to have a red day and potentially a red week. And a red week is especially dangerous because of how this is set up on the weekly chart right now. If we sweep, as I talked about at market open, if we sweep those daily lows here, you have so much clustered here from just a price action and a technical standpoint with the 50 MA, the low of last week's candle, and that Friday low. If we get under that area, it's going to drive a lot of fear into the market. So I would still remain very, very cautious here. All right, no one voted in the chat. So I guess we're just going to go, we'll do what I want to do. And what I want to do is roll into the VIX segment. So we're going to roll into the VIX segment here. So make sure you are paying attention if that interests you, which it should interest a lot of you. Something that a lot of people don't talk about for some reason. I think it's very valid, something that a lot of people should talk about, because understanding volatility, at least for me, is how I've found a lot of success with trading, mainly due to the fact that again, when I talk about volatility, I'm talking about if things are risk on or risk off, not necessarily bullish or bearish. So understanding the VIX on a little bit of a deeper level allows you to see things not only as a bull or as a bear, but to see things from a should I have more money in the market or should I have less money in the market? And I think that's a more mature way to look at the market. So I'll pull up the VIX while we're here, or while I'm talking about it, which is, we'll see if it updates. I don't know if UVXY is even updated. That's a daily. Let's look at the 1 minute. Last candle was at 9:50. All right, so we're 2 minutes behind on the daily or the 1 minute candles on UVXY. So we'll keep the VIX up here, which last updated now. All right, so this is valid. So we'll keep an eye on the VIX while I talk about it. See if that does anything for you. Alrighty. So a lot of people, when we look at the VIX, don't really understand what backwardation, what contango is. These are just fancy words that some people say sometimes, and they don't really know what it means. So I'm here to explain what backwardation is, what contango means, and what any of these fancy words that sound like mumbo jumbo from a foreign language actually mean and how it could apply to your trading. So first, let's take a second to understand what the VIX is. And what I define as the VIX, or how the VIX gets its value, is the spread between SPX contracts over a period of time. All the SPX contracts, their spread, how far the bid and the ask are from each other, give you a gauge on volatility. So it kind of gives you an idea of how nervous or scared the market is when those spreads are wider. So when the VIX goes up, there's a bigger price disagreement. People aren't understanding where the market should go. And when the VIX is lower, there's a smaller price disagreement, meaning there's the market's more in agreement of what is going on. So when the VIX comes down, the spread's tighter. So it's more sure whether the market's going up or down at that point in time. So when we're looking at the VIX, we have to understand that there's not only the VIX, so spot VIX, but there's also VIX futures. So markets, specifically the CBOE, give you the ability to trade, if you like, the VIX or spot VIX, so the volatility right now, and also volatility contracts into the future. This is important to understand what backwardation and what contango actually mean. So traditionally, when the market is in contango, it means that over time, volatility is to come down, right? So essentially, as you go further out in time, volatility contracts go up, because volatility short term should continue to go down, and the uncertainty in the far out future is a little unknown, right? Which makes logical sense when you think about it. So to put it simple numbers on it, a VIX of 1 today, and maybe the contracts for August are a VIX 5, right? And again, I'm just using simple numbers here. That makes sense because near term, the market's not anticipating crazy wild things, so the volatility is lower than what may happen in August. Between now and now, it's October. So who knows what happens between now and August? So the market is pricing in something could happen between now and August, which makes logical sense. That's contango. Backwardation is the inverse of that. Backwardation is where the VIX, and again, using simple numbers, the VIX may be 5 right now, but in August it may be a 1. Now, what makes that weird is it's unusual because backwardation is the opposite, which is showing that near-term volatility may be higher for some reason. There's a lot of driven fear right now, much, much higher than it is in the future, which means the market's pricing in some level of extreme fear, essentially, or something very bad that could happen in the market. There's a bigger, again, we go back to what we define as the VIX, a bigger price disagreement between both sides, the bid and the ask across all XPX options chains, that the market's going, we don't know what's going to happen here short term, and that spread is actually wider than the spread over in August, those contracts. So that is giving the inkling, or gives us the idea, essentially, that traders short term are very nervous. There might be a crash, or a fear of a crash, geopolitical risk, earnings, like big earnings potentially. There's things that could affect that kind of thought process. However, it also gives the inkling that things may calm down later. Again, volatility is super high right now, but in the future, it's not continuing to remain high. So volatility is not necessarily sticky in that term. So to kind of put a button on that real quick, if we're looking just at contango, that's saying that there's calm right now and there could be more volatility later, which is typically how the market is. Right now, you're not expecting anything wild to happen, but in the future, something could happen, which makes sense. When you buy any options contract, when you buy more time, it costs more money because you don't know what's going to happen. So there's a higher risk of wild swings in price, right? Anything could happen. The more time is left on that contract. Backwardation is the inverse when they're saying there's a lot of fear right now, but the calm is expected later on, which again, the backwardation piece of the VIX is something that isn't common. It's not as common. Most of the time, the market is in contango. So now that we understand what contango is and what backwardation is, we're going to kind of dig into the understanding again of what the market may look at or do when it is in backwardation. So when the market is in, or when the VIX, I should say, is in backwardation, that's showing that there's short-term fear or panic. So something has essentially spooked the market, right? There could be a sharp sell-off, like we saw 2 Fridays ago. There could be bad economic data, again, a geopolitical risk. And what it's essentially saying is that traders on the market want insurance right now. They're willing to pay a premium to protect their portfolios right now because they're anticipating more uncertainty, higher than usual, on the market, at least in the near term, because the market cannot agree on where the SPX is. Remember what the VIX is? Again, how wide those spreads are. The spreads are either getting wider or staying wide, so there's higher fear, there's higher uncertainty, and as a result, people are willing to hedge their portfolios and pay a little bit more for that potential uncertainty to protect themselves, and that's why the VIX would be more, theoretically, more expensive. Traders are also going to expect those conditions to calm down later. So typically when we see the market move into backwardation, the VIX will spike up. And those spikes tend to be very dramatic. They tend to be very quick to the upside, and they tend to kind of melt slowly down. Now, there are scenarios where the market can pop up on the VIX, and it kind of shuffles in between momentarily a period of backwardation and contango where it's not one way or the other just yet, and the market's still trying to find its footing, which is ironically where we're at basically today. So we're going to talk about that in a little bit with real-time example here. But essentially, going from that backwardation to back to contango tends to, historically speaking, hint towards a market bottom, especially if that backwardation lasts multiple days. So a good example here, if we look at the VIX, we could pop all the way back to, and again, we're talking about the specific pop that we just had here recently, but let's go back to April when we had that tariff scare, or the original tariff scares here, which I should really zoom out a bit. Big pop up, right? We went into backwardation because volatility near term went really high, right? Really, really high. And volatility in the future was lower because the market was expecting things to calm off eventually, right? And, it did, right? See it happen here. But this time, so look at 4/7/2025 on the VIX, and a period of backwardation was multiple days. Tends to be, and I don't know, we can go back in time and find out, but I'm assuming we moved into backwardation probably on this candle on 4/4, maybe 4/3, and we can probably logically justify it went to 4/11. So for simplicity's sake, let's assume that we went into backwardation on 4/3, and we'll give it another day buffer. So between 4/3 and 4/14. Now let's look at the SPY, and go to 4, 4, and 413, which is down here. And 4-3 is this candle right here. So it's after we've already fallen a little bit. So volatility already kind of peaked up a little bit. And in that time period, so we go to 413 or 414, which is right here, we had some level of a market bottom. Now, again, I don't have the exact data to tell us where backwardation flipped back to contango exactly, but you see an exhaustion here, a big spike to the downside while volatility shot through the roof. And when we had 1 or 2 or 3 days of that, that's typically when that flips back to contango, the market does this, right back to the upside. All the fear is gone. We flipped greatly to the downside with that fear, and now the market resumes back to its bullish nature, theoretically, right? Go back to the 1 minute here if you guys want to watch this live. There we go. So that's something we need to keep in mind when we're looking specifically at backwardation and how it affects the market, right? Typically, when we see backwardation, it can suggest short term that the market is seeing some level of a bottom. Now, it depends on how deep that backwardation is, right? Like we just saw, or that example I just gave you from April, was a pretty giant spike. And again, I don't have the data in front of me for back then for what the contracts traded at, but we can assume that we were in backwardation for a period of days, and that allowed it to really get a rally to the upside. Typically, when we see a quick burst of backwardation, which so far we're shuffling there, so we're going to talk about that in a minute with a real-time example. When we see a short burst, so we see volatility pop to the upside here, like we just saw on the VIX right here up to 28.99, and we saw a little rally here, so we could call this a short burst. That's like a temporary fear thing. That is the market saying we're quickly panicking, right? Things could go to hell. If we see sustained backwardation, so we're staying at an elevated area where the short-term VIX is higher and the longer-term contracts are lower, that could actually be very indicative of longer-term market stress. And those are the conditions you really want to be careful of if we see that happen. So if we see a state of sustained backwardation, that could actually signify that the market not necessarily will be moving in a bear market, but that there are a lot of stressors in the market, which typically results in a bear market, but it typically would affect price very, very, very heavily. What you want to look for is if the market is in backwardation and price stabilizes, which you could argue that we've seen that on the SPY the last few days, that is the sign of that potential bottom forming. What you don't want to see is price destabilize while we're still hovering around in backwardation. So now that we've gone all over that, I want to pull up, actually, let's go over one thing. So the last thing I want to touch on before we use that real life example is what happens to the VIX if backwardation flips back to contango and then the market still sells off. So that would indicate to us that volatility short-term was high, it went back low, and then logically you're thinking, well, if the VIX goes down, the market should go up because volatility is lower, people are more sure of where the market should go, it should go up. That may not necessarily be true, and this is why I always say volatility in the market do not have a one-to-one relationship. They have a close relationship where typically if VIX goes down, the market goes up and vice versa, but that's not always the case. So what it could mean if we went from backwardation back to contango was that there's essentially a false calm or complacency in the market where traders may think volatility is over, so they stop paying upfront for that protection, right? So spot VIX moves down a bit because near term they're not as concerned, but then the market can surprise them with another leg down, something bad happens, right? So that fear could leave the market. So let's pretend right now that the fear leaves the market, as you're seeing the VIX is at 1935 and the other day was at 2988. And let's pretend that Trump goes into a microphone, pulls down his pants and farts directly in the microphone, and that causes the fear to flush into the market, right? The market dies off. That's going to surprise traders very quickly because the VIX was not prepared. Traders were not prepared for that. So they thought the volatility was over and it actually wasn't. So that can happen through strong earnings disappointments on like important stocks like Nvidia or Google, Microsoft, etc. Or it can happen when traders are just caught off guard, simply put, when something happens that is just kind of unpredictable. Now, if that happens, that could actually be a sign that sustained selling off will occur. So if the market sells off again after contango returns, it suggests that the backwardation was not the bottom, it was just a pause, which is where we are right now, which is an interesting point that I want to bring up and how we're sitting actually basically between a backwardation and a contango point in the market, where we could actually be at the start of a pull down, at least near term, as we're talking about this right now, where you're not out of the woods either which way. Things are not bullish and they're not bearish yet, but either way you're looking at it, the risk should be a risk off environment right now. Now, in general, like I said, traders may be caught off guard by a volatile event when we flip back to contango, because they think whatever the fear was in the market, in this case, in current time, it's 10/20, 2025. We're talking about trade deals with China, and that caused some fear to come into the market. And now we're talking about those deals, I should say the fear from those deals easing, right? So consequently, the VIX is coming back down because traders are assuming that the market's going to relax at this point. Now, if that changes and the news flips again and says, nope, we're in a full trade war with China, that is actually going to indicate that the market should have a sustained sell-off, just looking at the VIX from how it's sitting right now, because we went from backwardation back to contango. And that would indicate, if we go back to backwardation, that that previous low was not the low in the market, and the I guess you can call it the fear cycle is not done yet. And you should see another spike in volatility. You may think the storm is over, but it's not. Right. So now we're going to look at a real life example here where we're going to look at the CBOE, their website right now, and look directly at the VIX contracts. So we look at the near term VIX contracts right here, and you can see their expiration right here. And we're looking at the next few weeks. And that's typically what I look at when I'm looking at volatility. And the settlement tends to be the same regardless if we're looking at between like now and like short term December. Settlement prices tend to be similar. They're very little differences, but they tend to be the same. So right now, if we're looking at the most recent VIX contract, which is this one that expires in 2 days, the settlement price right now is at 2091. So right now, and then let's go out to, I don't know, what is this? March, right? You have a settlement price of 2180. So what that is indicating is that right now we're in contango, because settlement price right now, and I'm using settlement prices to keep things easy. The settlement price is 2091, and the settlement price of the same, or not the same, but the VIX in March is higher. So that indicates lower volatility now, higher volatility later. That's contango. So things are normal. The fear in the market should increase over time because it is more uncertain what may happen longer term, right? However, these data points, and this is where my fear comes in and why we're not out of the woods yet, these points are very close together. We go to the furthest contract out. We can actually look at the last 4 contracts out here. 2180, 21.9, 21.9, 21.9. And right now, 2091. That's too close for comfort for me, where just 1 point on the VIX for this far out makes me a little cautious, because this tells me that near-term volatility is still relatively high. Now, I'm not saying it needs to be 30 points high or anything ridiculous, but because this is so high and because this is still in earshot, really, this could flip us back to backwardation, where this number, maybe in the next 2 days, whatever, settles at 25. And now this number is still 21.9. Guess what? We're in backwardation then. And that is telling me, if we see this is your trigger here. If we see the settlement price on our near-term VIX contracts go higher than our settlement price on our longer-term VIX contracts, that low that we saw in the market 2 Fridays ago may not really be the low. That backwardation low that we saw may not actually be the low in the stock market, and may not actually be the low for the VIX as well. This is too close for comfort for me. And this is why I took all the time to walk you through what backwardation and contango means, because now you can use this as a real life example, and you can do this again whenever you decide to rewatch this, because I'm recording it right now. Whenever you decide to rewatch this and get an idea of how to feel out and how to read the volatility, how to read the VIX right now and compare it to market performance, when you see the points this close, at least in my opinion, especially when we're looking out, like all these months are not very far off. They should be sloped a little bit more, at least in my opinion. You may differ in opinion, but this is not a wide enough spread over all of these VIX contracts where I feel comfortable, right? And you could even argue like a short-term backwardation right here, right? Looking at 11.9, so next month's contracts versus this week's contracts, and relatively all the other ones are the same, where you actually have higher volume than the ones expiring this week, but the settlement price on the ones expiring this week are higher. So short-term speaking, we are in backwardation. Now, I personally like to compare longer term out because it makes more sense, but this could still drive the thought process that backwardation still persists in the market. So as a whole, this is what you want to keep an eye on when trading volatility and when looking at what the market is doing in general to get an idea of how the SPY and SPX as a whole can perform and how other stocks will perform. And most importantly, as I say many, many times, you should not look at the market as a bear or a bull market. You should look at things as more risk on or risk off. When you're in backwardation, you should be considering a risk off position because things are going to be more challenging. There are more emotions. People are panicking. People don't know what they're doing, right? Algorithms may wildly buy and sell. Stop losses may be triggered left and right. As a whole, you want to be very, very careful when the market is in backwardation. That's why I said, and I stress this, especially for newer traders, when you see volatility sitting the way it is, you want to wait for clearer skies. You want to wait until there's more certainty. And when there's more certainty, then you can feel more comfortable to trade safely than in an environment where volatility is a little bit more questionable. I was going to say, Toby, are you using notes? Oh, I didn't flip back my screen. Yeah, so settlement, lower now, higher layers, contango, correct. Settlement, higher now, lower later, backwardation, correct. So backwardation is when you should be more risk off, to put it very simple, and contango is where you could be more risk on, if you want to keep it like really simple. Weeble throwing AWS under the bus with a pop-up. I just saw that, Hatchet. Weeble says, we're currently experiencing delays due to technical issues with multiple external vendors related to the ongoing AWS outage. Some users may notice lag or temporary disruptions in market data, banking, or other app functions. We are actively resolving to resolve this issue as quickly as possible. Thank you for your patience. Okay. In general, also, guys, for going back to the market, I can't even get my line. There we go. If NVIDIA isn't over 183.30 and the SPY's not over that red line, no bull. Like, not a bull. No. I need the support, especially with how this environment is right now. I need to have one of the biggest companies in the entire stock market supporting a bull narrative. I cannot have, especially with how NVIDIA is sitting on the daily chart, this does not look good. This could be reminiscent of some level of it's not a clean one, so don't chartists out there, they're purists, a head and shouldery kind of look. Some level of price action here, exhaustion near the top, consolidation down here. You're floating around the 50 MA. There's a lot of, I believe the POC was up there. I just zoomed out or whatever, but yeah, right there. There's a lot of volume right at 179.52. If that breaks, you also have the 50. All right, so here you go. On NVIDIA, if it breaks 179.50, be heavily concerned, especially if it stays under that. That's going to put you under your daily POC. That's also going to put you under the 50 MA on the daily chart. So the fact that NVIDIA is actually not rallying as strong as the market, comparatively, because they have very similar charts as well, it's a little concerning. A little bit. IWM did reject that 247.18 area as well. So this is not good. Near term. Not trying to scare. Conversely, volatility is still selling off. Volatility is melting to the downside, at least right now. So UVXY is coming into daily support here. I'll actually knife through daily support now that my candle's updated. So watch if it recovers 11.25 on UVXY. 11 probably will hold today. I don't really foresee volatility sinking lower than that today on UVXY. So 11 should hold on UVXY. I'm going to see if I can maybe get into one of my other accounts here. How widespread is this outage? Are people complaining about it on social media? I feel like that's always the sign of how bad something is. When I see people like, oh, I can't do X, Y, and Z, then I'm not, all right, things are bad. Things are pretty bad. Sorry, I'm trying to edit a position I have open, but in a market order. All right, we'll see if that fills. Yeah, public's still out completely. Completely out. So sorry about you guys in the small account in the seed to tree challenge. It's out. Can't take any profits or anything. Can't do anything. It's out. Helm says, yeah, it's bad because 80% are on hood. Lol. Hatchet, don't hold your breath, man. He said Weeble seems to be working now. I would not hold your breath. I would not hold your breath. It's still laggy, so if it's working, this is not working well. At all. You guys like that little, the hatchet on, or the hatchet. I said hatchet because I'm reading your name. So I'm not going to trade today, so I'm not sure. I don't blame you. You guys like the VIX explanation? You guys have any questions about that? Was that clear and concise enough? I want to make sure when I'm talking about more, I don't even want to say complicated subjects. Not necessarily complicated. It's that for some reason, there we go, candles appeared. For some reason, a lot of people who are in the finance community like to gatekeep certain words, and then they try to sound cool and smart when they use them. And I think that's really dumb. And I think for us to have really pure educational conversations with each other, like, how can I tell you what I'm looking at or what I'm thinking if I use a word like backwardation just to try to sound smart, and you're just like, oh yeah, cool, like, you don't know what I'm talking about. So I want to make sure that if we're talking and I'm trying to educate and trying to share what I learned, that you then now learn something and we can work together to the future, right? You want to be able to grow and not just use fancy words because you want to sound cool. Silly, in my opinion. I'm seeing a lot of people having issues with a lot of other. Maybe it's just like everyone's just getting slammed. All right. Well, I guess we'll come back to that. Let's take a peek at Gap. So we saw, and I'm sure a lot of people saw about this on social media. I actually took a stab on it, so I'm currently long. If the chart loads, I'm long Gap right now via options and two leaps. Okay, well, here's the chart. Here's the price, right? This is how much it's worth. I like the price that it's at. I think the price will go up. And we saw a lot of people share on social media some really, really, really big flow come into Gap for, wow, look at that, no data, for, I believe it was December contracts at the 24 or 25 strike. So I grabbed some of those because I found it interesting and I like the chart as well. There we go. The daily chart was what caught my eye the most. So we had this little sweep down. We're starting to move back up. We're above my LOIs here, which is a nice sign, and we're above all of our EMAs and MAs. Now, on Friday when I entered, we we're just shy beneath that. I was kind of betting on us to get above that. I like the volume we're seeing, and you saw the MACD curl up. So this is the first sign of getting some level of a decently bullish reversal here on Gap to push back to the upside here near term. The weekly chart also wasn't looking atrocious if it loads, but at least we had the daily chart to look at. So in conclusion, my analysis of, there we go, crazy base, right? Now, highs and lows, of course, but really this has been basing, if you want to go all the way back to maybe like here, 2023, and kind of just ping-ponging around, shopping around in here. I think this is overdue for a decently hard push, and a company like Gap may behave like a Walmart in the event of a market downturn. Now, I have a little bit of information that is, I mean, I guess it is public. So it's not like non-public information or anything. But I am familiar with some of Gap's internals because I used to work with Gap. And they are a pretty cleanly run company. Like, I like how they do their warehouse. Their infrastructure is pretty solid. They have a good distribution team in general. And those are the kinds of things, and they're pretty small. Like, they're not losing money in general. And those are the kinds of things I'm looking for when I see a big old base like this. And when the EMAs get super, super, super tight and the daily chart looks good, that's the key point here. This is looking like it's going to get a hard weekly push here in the near term. And I actually think that if we see market weakness, we will see some flooding to not only Gap, but other apparel companies as well. You guys know I like Crocs. I'm long on Crocs right now as well. Because these companies, they're not sexy, right? They are not flashy, and they're not quantum computing, and they're not the future of the world, but you know what they are? They're stable. And one argument that we talked about a little while ago, for those who watched the program, is we were looking at how consumer staples were underperforming the market in general, and even underperforming its other defensive peers like energy and utilities in the near term when the market was seeing some red days. Where even when tech was down, sometimes energy and utilities would be up and consumer staples would still be down. And when tech was up, consumer staples sometimes would be down while energy and utilities were up. And that's a little unusual. Now, some of that rolls into with the whole nuclear thing and obviously that being a hot area of the market right now. But what is interesting to me is I believe, and what I'm personally going to start rotating into, especially if the VIX sits where it is I'm going to start rotating some exposure more so into consumer defensive names. I like Gap right now. The other one I like, General Mills, which I was long on this one that I closed out at like a scratch trade. I made like 1% on it. Boring. These are not going to move quickly or anything. But General Mills, right around its low here, 52-week lows, it's hammered. But this is not a company that's going to go anywhere. It'll be fine long term. It's going to move like a snail. But these are the kind of companies I want to have exposure to in the event we do see a market downturn and we do see tech get hammered and all these other things happen where people want to protect their money, and they're going to look to put money into companies like General Mills, Gap, UPS. It's another one that I was long for a while. I sold that one for like a 10% gain. I was long down here. I sold somewhere up here. And I've been watching this one. It looks like, again, we're going to make a little bit of a reversal here. If these earnings are positive, which, who knows, it's earnings, this is going to pop back to 100 very quickly. This is not a company that's going to go anywhere, right? It's another one of these companies that is a key infrastructure piece to the United States and the world, really. This is not going to go anywhere. These are the companies you want to be looking at in this environment, in my opinion, especially how UPS is sitting right now. You've got a strong point of control down here. This is the monthly chart. Point of control is right at 81.64. So we got a little bit of bounce there. 3 months respecting that low here, trying to turn it around on higher volume, right? Obviously this candle's current candle, it's open right now. It's not over yet. But the last 3 months have actually been raising volume as we're hovering around the 200 MA. We're hovering around the point of control on the monthly chart. This is where you should have some exposure with your money because you want to shift a little bit defensive. I'm not saying you could take all your money out of your risky plays or whatever, do whatever you want, make your money, I don't care. But you want to have some exposure because you want some protection. I mean, this is the same guy who's talking right now that is long better stock, right? And I'm also long open stock. Now, these are meme names, obviously, but that has a certain amount of my portfolio I'm willing to risk. Whereas these other names, I'm also going to risk a certain amount of my portfolio where I know that if I buy General Mills and I buy Gap and I buy UPS, if I wait 5 years, they're A, probably going to be worth more, and B, they're probably not going to lose all their value. Anything can happen, of course, but I don't suspect General Mills or UPS or Gap going out of business between now and the next 5 years. Could Open go to zero between now and the next 5 years? Hell yeah. Could it go to 100? Maybe, right? But the risk is different. And that's what's important to understand, especially in this environment where we're seeing elevated volatility, a little sticky here. You want to be a little bit more cautious and wait and see what may happen. But while you're waiting and seeing, there are some kind of dip buying, I guess if you want to call it that, opportunities in companies like this that could offer you some exposure to the market still, but not as much exposure to like big tech names. And honestly, worst case scenario, you buy into these companies, these more like defensive companies or whatever, and they underperform, right? They don't either perform as well as the SPY or the market just rips to highs, right? More than likely, that's going to be a positive side effect for these companies. They might go down, right? Anything could happen. People want to take their money out of a defensive name and move it back to an offensive name. That could happen. But in general, more than likely, these are safe places to park your money. Even they may not look like the sexiest companies, but in comparison to the evaluations that we've seen at some of the bigger names, the Mag 7 names that are at very high evaluations right now with questionable geopolitical risks right now in the market, even near term, I think it would be the wise thing to do to be a little bit more defensive and a little bit more wise. So personally, what I'm looking to do this week, and I might even start today, as I said earlier in the program, for those of you just joining now, because for some reason I'm seeing a spike in viewership right now, I went pretty heavy in cash. My personal account, about 70% in cash, and then my small account that I run in exclusive tradings, I think is 52% in cash. I'm looking to actually take some of that cash and diversify it into some of these names where I know I'm not going to be making a lot of money. I'm also probably not going to be losing a lot of money, right? And it allows me to be a little bit defensive in the event that the market has some level of a downturn. I might see some bullish flow into, and I'm just using these three names as an example, some of these names where even then I could have balanced risk to reward. So let's say, for example, I entered General Mills here at 48.75. The 52-week low here is 47.48, and that was just a few days ago. I could put a stop on at 47.40, whatever. I'm only risking like $1, a little bit more than $1 to the downside. And the upside, it could go back to maybe 59.12 in the very near-term future. So I'm risking $1 to the downside to make $10 to the upside. 10 to 1 risk reward sounds great. Even if we go to my short-term price target here of 53.63, that's $5 to the upside and $1 to the downside. So I'm risking a 5 to 1, or technically a 4 to 1 risk to reward setup here. Would you, if you gave me $10 and I said, hey, I could turn into 50, would you do it? Or would you take a more risky trade where you could make more money, but you take on a lot more risk if you're looking at even a better, where I am taking that risk, but I'm exposing less dollars, theoretically, to a name like this. Fewer dollars, lower size, to riskier names like this, where it makes sense. I could take that risk, but still be defensive. So that's just something I want you guys to chew on. Obviously, depends on where you are in life. Some people are older and they want to be a bit more careful, and other people are younger and they want to be more aggressive. And depending on how much time you have to recover if you make a mistake, those are things you want to consider. Anyway, let's pop back to the market, and then if you guys have any questions, feel free to drop them in the chat. We're going to wrap it up here a little soon. NVIDIA actually got a little bit of a push here, hard push, and broke over. Oh, now I got to zoom this out. Broke over that 183.30, that key level, and moved a little bit to the upside here. Now sitting around this other LOI at 184.55, which gave the SPY enough juice to break over that 670.23 area on the market, which my candles are not updating, but you can see the live price here. So again, for me to be a bull short term, I need to see a close above this level. Now, we do have some big earnings this week as well. So that does muddy the waters a little bit because those big earnings could obviously affect how the market perceives or how the market will react to said news. So watch this level today as a whole. And VIX is still selling off right now at 1896. You're in a big flux zone here. Again, as I highlighted before, 1830s are low, 2030 is what you're looking at to break to the upside if you're a VIX bull. So you're in like I said, you're in like a flux zone here where there's a lot of range on volatility here, which is also not good. Again, from a risk on, risk off perspective, whenever the VIX is in essentially like a $1, right now you're in a $1, you're trading at 19, got about $1 both ways, right? That's not fun because you will swing, and that's not great. You want to be very cautious about that. Eddie says you made Gap start moving, talking about, yeah, I have that effect. Me and my 100 and something viewers, 150 viewers, I have the ability to move an $8 billion company like Gap. It's pretty cool. One day the SEC will investigate me, but until then, I will shamelessly. Oh, but side note, how can someone like Jim Cramer go on TV and just say, talk about stocks, or any of these guys on CNBC or MSNBC talk about stocks and it's not pumping? And some of them are tiny. I don't know. This is so frustrating. I'm sorry, guys. I'll probably just wrap it up early here because I can't even. Like, I literally can't do my job. But I'll give you at least something to walk through. So keep an eye on for the day. And I will be doing, I want to say 2 more streams this week. I don't know when just yet. So I will be putting out a message. So make sure if you're not following me on X, follow me on X already. Or if you're not subscribed or following me on YouTube, pop over there and hit the subscribe button. I will be putting an announcement in both. That way you know when I'm going live. On top of that, if you like the show, you want more content like this, do me a favor, go over to that YouTube channel, hit subscribe. When we hit 500 subscribers, this will be an everyday show. So if you enjoy the content, please make sure to do that and tell a friend if you will. Appreciate all your support. On top of that, we are near 200 subscribers. We've been growing very, very quickly. If you could long Atom stock, we are parabolically moving to the upside. So stock ticker ATOM. We are moving to the upside very quickly. So if anyone has a way to, and can I go long on myself on Polymarket? Is that something I could do? That would be pretty cool. Can I open a Polymarket for me and say when I can get to 200 or 500 subscribers and see, can I go long on myself? Is that something people can do? Is there a way I can trick the algorithm into letting me do that? And I can make money. You guys can make money too. You all watch me all the time. You can long ATOM stock, Atomcash stock. But no, in all seriousness, I do appreciate all your support, guys. I appreciate you guys enjoying the content. Most importantly, I like you when you guys interact, when you talk in the chat. It's good to have a back and forth with you guys because most of the time, a lot of people are thinking what you're thinking. Now, I know a lot of you are busy working or whatever, and you have your headphones and you're just listening to me. I know that. But for those of you that do have the time to interact, when you guys ask questions, it tends to work out very nicely because after the show ends and later on in the day, I tend to get messages of people saying like, oh, I really liked when you talked about XYZ with whoever asked that question. Because a lot of times people are thinking about these things, and for you to speak up about it is very helpful to other people as well. So appreciate all you doing that. Yeah, Toby, write some puts on Atom. See what happens. Wait, write some puts. Yeah, sorry. Yeah, do that. That's good. I'm talking tough like you're trying to short me. You're not trying to short me. You're trying to long me. Attaboy. I misread it. It's Monday. Give me a break. Anyway, you guys know what we're looking at on SPY right now. Let's look at... I didn't check the At The Money IV because I was distracted. Okay. IV at the money right now is actually lower. We're sitting at around 14.15, and our rolling 52 week is at 19. However, this is interesting to note. Our IV percentile is at 70%. That has moved up dramatically. So that could be indicating that the market is still pricing in a more volatile move on the SPY very, very near term. I'm going to say this again while the market's at the high of the day, essentially. Unless we close over this level, I'm calling for a red close today. I think we're actually going to close red on the day. Will I be right? We'll see. If we can stay tight and high above this level, the 670.23, then this looks pretty good, at least overnight. If we fail this level, especially if we failed on volume, so we have a big volume rejection of this level, I would be very cautious and more than likely look to close, not necessarily low of the day, but close red, which I guess would be low of the day. So, yeah. You have a lot of range from pre-market, ultimately, because you had a gap up. You came down, you filled the pre-market gap, I believe, right? We did. We filled the pre-market gap, which I don't really take credence in. Some people do. But getting down to like mid 660s wouldn't surprise me by the end of the day. It really depends on NVIDIA. And like I said, it really depends on SPY up here. And as I said, and I'll remind you here, whenever the VIX is in this range where you got about like $1 both ways, there could be very whippy price action. You could have a big move. Again, as I like to say, it just takes Trump pulling down his pants and farting into a microphone to change the stock market up or down either which way very quickly. And how we're trading right now is very indicative of getting some sort of push via some sort of news or something like that. And we don't have anything scheduled today. The rest of the day is supposed to be pretty quiet. So a little concerning. As we look forward to tomorrow, we do have some earnings. So in the morning, you got the big ones: General Motor, GE, Coca-Cola, and Lockheed Martin. Those are the big ones in the morning. So we don't have any like big tech ones overnight. You do have some Fed speakers tomorrow. I would just be very, 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 very cautious. Mainly because, and it's the whole reason why I did that whole VIX lesson today. And I'm going to upload that to the YouTube channel. So if you want to rewatch it, you can. Because I recorded it, so I'm going to re-upload it. But you want to be very, very careful. Check that. Keep that link open You literally can just Google CBOE VIX futures, click where it says market data. Here, I'll even show you. I don't think I have the, oh yeah, the URL's right there. I mean, you're not gonna type that whole thing in, but you just go to CBOE's website. You can even Google it. Just literally click market data, scroll down. Here you go. Bada bing, bada boom. This is basically all you need to do. Watch this very carefully. Check it every night. I'll kind of give you an idea, especially what's most important is where we settle, right? Where the contracts settle every day. It's going to give you an idea of where things are. Also keep an eye on volume. How much volume, how many people are trading these contracts. The big concern that I'm still want to highlight here is the difference on this November chain versus this week, where this week is still pricing in more volatility than the November one, theoretically. And that's where you should be a little concerned, in my opinion, because that's still technically backwardation. And then we flip back to contango here. All right, so it's shaky. You want to see this more clean. You want to see the distance between these settlements more cleanly. You want to see a clean slope of low to high, not low or high, low, high again, a little bit higher, tiny bit higher, really, really, really tiny bit higher, really, really minusculely higher, and then barely a little bit more. Not fantastic. So keep that in the back of your mind. Anyway, guys, that's going to wrap it up for the stream today. Like I said, make sure you're following me on X or on YouTube, where I will let you guys when I'm streaming again this week. I'm not too sure. I got to figure out what's going on later today and everything. And then I'll have a better idea, and I'll let you guys know ASAP. But thank you for tuning into the show. Thank you for all you guys coming out. Before you leave, if you haven't already, drop a quick like on the stream. Appreciate your support. And as always, some will say you need an extra trade. Well, I like to look at things from a different angle, and that's always we get right here on the Atomcash angle. Have a great rest of your day, guys. And remember, precision beats prediction every damn time. I will see you later this week.
The time has passed, and that's a wrap. You're armed with the angle and your plan of attack. While the show is at an end, your journey continues. We lit the fuse.